The US dollar has hit a two-month high. Demand for the US currency is due to risk aversion ahead of the debt ceiling increase. In addition, the dollar is getting stronger with each new hawkish statement from the Fed. For example, Bullard hinted at the possibility of a 50 basis point rate hike this year. Currently, investors are eagerly awaiting the minutes of the latest FOMC meeting, which will be released tonight. What other significant events in the traders' calendar could influence trajectories of popular currency pairs? Let's discuss this on our InstaForex TV channel. On a Thursday, investors will digest the growth rate data of the largest European economy from the very beginning of the European session. As for Germany's GDP growth, it will be the final estimate. It's likely to confirm the accuracy of the preliminary data, which is why it's already priced in. Therefore, investors will pay more attention to report from the GfK research group on the changes in consumer sentiment. The indicator is expected to continue its growth, and this is due to a slowdown in inflation and expectations of wage increases in the country. And this news may have a positive impact on the market and boost the euro-dollar pair for some time. In the US trading session, investors will focus on the weekly data on unemployment claims, as is usually the case of Thursdays. The latest data showed a rather tight situation in the US labor market. Thus, companies have to raise wages, and this is likely to spur inflation, forcing the Fed to continue interest rate hikes. Looking ahead to data for the week ending on May 20, economists expect tensions to remain, which may strengthen the US dollar. On a Friday, investors will receive more macroeconomic news. Markets are awaiting data on consumption trends in the UK, and it looks like retail sales are rebounding. After falling by 0.9% in March, they may rise by 0.3% in April. This will be a reassurance to investors that the UK economy is resilient and that the Bank of England is ready for another interest rate hike in its battle against raging inflation. Meanwhile, the most important batch of information will come from the United States, and the durable goods orders report is expected to show a significant drop. Therefore, if disappointed investors start to sell off, the stock market may receive a blow. Forex traders will be more interested in the consumer spending data. Notably, consumer spending accounts for about two-thirds of the US GDP, so this data can reveal the state of the US economy, and the indicator is expected to grow by 0.4% in April. The core personal consumption expenditure price index is likely to remain unchanged. Since the US regulator relies on this indicator for its inflation forecasts and future monetary policy, this index may indicate the Fed's further steps. Given that spending is expected to continue growing, we can expect the rate to continue rising, which will once again support the US dollar. How we're going to be in the short term in financial markets? We will definitely tell you in our news releases. Subscribe to our channel and follow news with us. See you soon!